What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel. Again, let's go ahead and talk about some stocks and about the brutality that we saw today in the markets. And today we had a brutal bloodbath in the markets across the board. Russell 2000 goes down today 4.76%. The Nasdaq goes down 4.68%. My goodness, Dow Jones goes down 2.79%, and the S&P 500 officially entered a bear market, going down 3.88%. As of now, the S&P 500 is more than 20% of the highs. Oil went up today just a little, only 0.17%. It closed today's trading session at $120.88. Crude oil has been going down on fears that the Fed is going to be very aggressive hiking interest rates, and therefore we are going to see, or that we are very likely to see, demand destruction when it comes to crude oil. Precious metals also went down. Gold went down today 2.94%. Silver went down 4.20%. And one of the only things that went up today was the 10-year Treasury yield, guys. TNX goes up 6.65%, and the 10-year Treasury yield closed today's trading session at 3.36%. The VIX also went up today a lot, guys, 22%, and closed the trading session well above 30 points. It is sitting as of now at 34 points. Can the VIX fill the next gap up to 40 points? We will see what happens with the VIX, because as of now it is a bit overextended, but we have so much fear in the markets as of now that I wouldn't rule out the fact that the VIX could climb up to 40 points. And this is going to be a very special week, guys. This week isn't going to be for the faint of heart. First of all, on Wednesday, we have the Federal Open Market Committee of June. That is obviously going to move the markets. And then on Friday, we are going to have quadruple witching, which is a day that occurs 4 times a year. And that's a day in which we see a massive expiration of options, of future markets, stocks, and indices as well. When it comes to the Federal Open Market Committee, what is going to happen, guys? It looks like the markets are starting to like a more aggressive Fed. And why? Well, because as of now, the Federal Reserve has been, very careful when it comes to the financial markets, and the markets are perceiving as of now, are feeling that we are about to enter into a very prolonged process or cycle of interest rate hikes. So a few hours ago, a report of the Wall Street Journal came out stating that the Fed is very likely to do a 75 basis point hike on Wednesday. They are likely to announce a 75 basis point hike instead of 50 basis point hike, which is what most of the members of the Fed has been saying as of now. Can that happen? A few minutes ago, we got the news from JP Morgan and Barclays, and they are also stating that we are going to see that the interest rate hike that is going to be announced on Wednesday is going to be at 75 basis points. And on top of that, these two banks also stated that the hikes that we are going to see in July and September are also going to be at 75 basis point hike, at 75 basis point. And if that were the case, guys, take a look at the 2-year Treasury yield. It closed today at 3.36%. So if JP Morgan and Barclays are right about the next hikes that are going to be announced by the Fed, then the Fed fund rates are going to be at 3% in September. So that might be it when it comes to hiking rates, at least for this year. And that is going to be obviously welcomed, by the markets, because that implies that maybe in September, the Fed, and depending obviously on whatever happens with inflation, because as you guys know, the CPI data report that we got on Friday was absolutely nasty. So if the Fed can actually destroy demand, if the Fed can actually decrease the inflation that we are seeing as of now in the US, by hiking rates, by hiking, as I just told you, 2.25%. If we multiply 0.75% times 3, then maybe in September they could say, okay, this is enough as of now. The Fed fund rates are well above a neutral. When we talk about neutral, we are talking about 2.25%. And if that were the case, the markets are going to feel a big, but I mean a big relief in in September, and that might be signaling some sort of a bottom. Today, the CEO of Morgan Stanley, you know that we have a lot of concerns out there when it comes to a possible recession that might occur here in the U.S. The CEO of Morgan Stanley stated that if we happen to see a recession, it isn't going to be a long and a deep recession, and we got a price prediction for the S&P 500 into the end of this year by Morgan Stanley of 3,400 points. So according to Morgan Stanley, we still have a lot of room to the downside. Talking about the two-year Treasury yield today, the two-year spread inverted once again. That's a sign that a recession is coming up. So as of now, we have the two-year Treasury yield paying a higher yield relative to the 10-year Treasury yield. That's absolutely insane. So, for the most part, this is a very accurate, let's say, indicator that a recession is coming up in the U.S. So that is something that is also worth pointing out about what happened today in the markets. Now I want to show you these guys because as of now we are seeing very unusual stuff in the market. This is the Dixie. This is the dollar of the U.S. And take a look at what happened today, guys. The Dixie broke or burst above $105 today. So as of now, the US dollar is trading at levels that we haven't seen in, get these guys, or that we haven't seen since 2003. So why is this happening? Well, whenever the Dixie or the dollar, the US dollar goes up a lot, this is a sign that the markets are feeling that the Fed is going to be very, but very aggressive when it comes to its monetary policy. So as of now, we have the Dixie going up like crazy. It is actually a bit overbacked on this monthly chart, and for us for us to see a bottom in the markets, at least a temporary bottom in the markets, we need to see two factors. We need to see the Dixie, the US dollar coming down, and we also need to see TNX, the 10-year Treasury yield coming down. So this is absolutely extraordinary. We are seeing levels on the Dixie that we haven't seen, as I just told you guys, since 2002. And when it comes to TNX, we also find a very unusual situation. Take a look at this monthly chart of TNX. TNX burst above today 3.27%. So 3.27% was a previous resistance back from September, back of September of, get this, 2018. 2018, we are seeing levels on the 10-year Treasury yield that we haven't seen in at least almost 4 years. And the level in which the 10-year Treasury yield or TNX is sitting as of now is a level, it's an area that we haven't seen since 2011. You guys can also see here on this monthly chart that TNX is very overextended. So for us to see at least a temporary bottom, or for us to see a definite bottom in the markets, we need to see the 10-year Treasury yield and also the Dixie coming down. And as of now, that doesn't seem to be the case. When it comes to, by the way, I didn't go over these sectors of the market. Let me show you over here, guys. When it comes to the sectors, an absolute bloodbath across the board, horrible day. Every single sector dropped at least 2%. Unbelievable. The best performing sector, and I am quoting best performing sector, was consumer staples, goes down today 2.18%. And take a look at energy, guys. What a haircut. It goes down today 5.22%. And as I just told you in the introduction of this video, this might be a sign that the markets are expecting a very hawkish Fed that might be able to destroy demand for oil anytime soon in order to come down, in order to decrease, or in order to fight against inflation. When it comes to the most important sectors of the market, an absolute bloodbath, the financial sector goes down today 2.98%, despite the fact that the 10-year Treasury yield went up. On normal market conditions, guys, the financial sector is correlated with the 10-year Treasury yield. However, if TNX is going up like crazy, obviously, because we have a lot of inflation fears as of now on the table, because the CPI data report that we got on Friday was very nasty. So and obviously, if we say, guys, this is something that is worth to be pointed out over here, because many people believe that if interest rates go very high or go higher, that's good news for the financial sector. But that isn't the case when we have a recession in the U.S. So the markets as of now are killing the financial sector, despite the fact that interest rates are going higher, believing that if we go into a recession, obviously credit is going to be hurt in a lot. And that's the reason why the financial sector is getting killed. The other and the most important sector of the markets, technology, goes down today 4.43%. So no gold medal, no medals today. We cannot award any medals today. This was an absolute bloodbath across the board. And take a look at these guys. The advancers and decliners distribution. This is the worst correlation that we have seen since this corrective process, or since this bear market started out. Today we had 744 stocks going up, and we had 6,149 stocks going down. What an absolute and horrible bloodbath across the board when it comes to the trades that I closed in today's trading session. Over here I have a screenshot. I got Best Buy puts like 2 weeks ago. I decided to close this position today. I ended up making $310. And on top of that, this is my Patreon. It is written in Spanish, so you don't understand anything. I bought back 7 cover calls of NEO that I sold last week, and I ended up making $110. So long story short, I ended up making today $420, give or take. So I ended up making some money in a day in which everything got absolutely killed. S&P 500. Let me pull up here the 4-hour chart. And check this out, guys. The S&P goes down today 3.88%. What an absolute bloodbath. Closes today's trading session at 3,749 points. We are very oversold here. We are about to see a relief rally anytime soon. Maybe we can see a turnaround Tuesday, tomorrow. I don't think that the markets are going to do much. I don't think that we are going to see a sustainable relief rally until we find out whatever the Fed is going to announce on Wednesday. That it seems to be that they are going to announce a 75 basis point hike. And I think that that is going to be welcomed by the markets. But take a look at the RSI of the S&P on the 4-hour chart. It is at 18 points. We are severely oversold. Some traders like to take a look at the daily chart when it comes to oversold conditions, and the RSI is at 32 points. We are also oversold on the daily chart. So if tomorrow we happen to see another red day, at what area am I expecting some sort of support? 3,700 points, guys. This is a previous support back from January of last year, and this is also a previous resistance back from November of 2020. So I think that if we happen to see a bloodbath, another bloodbath in the markets tomorrow, the bulls or the S&P 500 is very likely to come across with buyers near 3,700. If we happen to see a relief rally, which I believe is in the cards, I am going to be keeping a close watch on 3,820 points. This is the lower pivot back from May. The bulls of the S&P found support at 3,820 points back on May 20th. So this is an area that if happens to be visited in an aggressive way, if we happen to see a nice relief rally in the S&P 500, this is an area in which I might be getting puts of the S&P 500. And mind you guys, I have put options of the SPY since 2 weeks ago. At some point last week, those puts were down like 2,200, and today they were in the money. Absolutely unbelievable. And needless to say, guys, from a technical standpoint, this is a very ugly looking chart, clear downtrend, below all the moving averages. We can see over here declining moving averages. So there's nothing positive for the bulls over here other than the fact that we are very oversold. So I think that we are likely to see a relief rally anytime soon. What is going on in the case of the NDX, the NASDAQ 100, the technology people, the Q people? What is going on over here? The NDX goes down today 4.60% and closes today's trading session at 11,288 points. And I am going to tell you guys the same stuff that I just told you in the case of the S&P 500. We are very oversold. Take a look at the 4-hour chart. The RSI of the NDX is sitting at 17 points. So we are due for a relief rally over here. However, if this peak fear keeps on spooking the markets, so if tomorrow we happen to see another bloodbath, where can the bulls find support that in case of another red day? I am thinking about 11,000 points. 11,000 points is a previous support back from November of 2020, and this is also a previous resistance back from July of 2020. And something that caught my eye today, guys, is the fact that the NDX closed today's trading session, as I just told you, at 11,288 points. And take a look at how this area coincides with the 180 SMA on this weekly chart. And take a look at how the bulls of the NDX found support at the low of the COVID-19 crash right at this 180 SMA on this weekly chart. Is this a coincidence? Is this signaling some sort of bottom in the NASDAQ 100? I don't think that we are even near to a bottom in this index, but this is, let's say, food for thought over here. This might be signaling a temporary bottom in the case of the NDX. If tomorrow a relief rally happens to take place, I am going to be keeping a close watch on 11,600 points. This is the lower pivot of mid-May. This is an area in which I believe that the bulls are going to come across with a lot of resistance. So, in other words, this might be an interesting spot in order to pick up put options of the NASDAQ 100. And other than that, clear downtrend, declining moving averages. This is an absolute bloodbath, or the NASDAQ 100 is looking extremely bad. And as of now, get these guys. The NDX is 33% of the highs, and I already told you. I'm going to pull up here once again the SPX, the cash index of the S&P 500. The S&P 500 is officially in a bear market. It is trading as of now, let me see over here, 23% of the highs. Wow. So much bad news has been already discounted over here. But guys, the situation that we have over here as of now is uncertainty. The markets don't know how aggressive the Federal Reserve is going to be. And that's a reason why we are seeing the market selling off left and right. Oracle just posted earnings, goes down today during regular trading hours, 4.60%, and closed today's trading session at $64.05. I am going to pull up the live news tab. Let's see. By the way, let me pull up here, first of all, the 1 hour chart. And Oracle is up a lot after hours, but don't worry, guys. Oracle is up 15% after hours, and the stock of this company is very likely to fall tomorrow, I don't know, 20 or 25%. So you know how this works. No good earnings reports are important in this bear market. So what did they do? Guys, let me see. So EPS came in at $1.54, beating the estimate of $1.37. Sales came in at $11.80 billion, beating the estimate of $11.67 billion. Very good earnings report. So what is going on over here? Do I have guidance? Oracle shares are trading higher after the company reported better than expected Q4 adjusted EPS and sales results. Let's see, Oracle post flat adjusted EPS, higher revenue for fiscal Q4. Company maintains quarterly dividend of 32 cents per share. So they beat on both EPS and revenue. I don't have guidance available, so what could be happening over here tomorrow, guys? So as of now, the bulls burst above this 50 SMA on the 4-hour chart at $70. And if I happen to draw a line over here, we can make the case that 70 bucks is a previous support back from early March. So if tomorrow we happen to see a relief rally, if Oracle doesn't happen to drop 30% tomorrow after having a beat on earnings, then watch out for a process of consolidation of Oracle slightly above $70. This might be a sign that the bulls are gathering momentum in order to fill the next important gap up to the 100-day moving average at $77. If we were able to take a trade from $71 ish up to 76 bucks, this would be an 8% profit. And figure this, guys, the stock of this company is up 14% after hours, and Oracle was so oversold before posting earnings that as of now, and despite the fact that the stock of this company went up after hours 14%, the RSI is sitting at 60 points. So Oracle isn't oversold, not overbought as of now. So who knows? If maybe we see a relief rally tomorrow, maybe the stock of this tech company could fill the next gap up to $76. And now let's go ahead and take a look at the second and last stock of this video, Tesla. This company, guys, which recently announced a 3-for-1 split, stock split. Tesla goes down today 7.10% and closes today's trading session at $647. Very ugly looking chart. There is going to be a vote on August 4th to decide upon this stock split. You guys know that I am a long-term shareholder of Tesla. I might vote yes on August 4th. I think that that is going to be the date. And I truly believe that Tesla was going to go higher today on this news because I thought that FOMO was going to kick in, but that wasn't the case, guys. The markets were in absolute fear mode in today's trading session. So, from a technical standpoint, we can see the RSI of Tesla sitting at 29 points. Full disclosure, guys, I purchased in order to take a swing trade. I purchased today 35 shares of Tesla at $660 ish. 665 bucks. So when it comes to that position that I opened today, my price target is going to be $690. This is a previous support back from early May and also a previous support back from late February. So that's the area in which I am planning on selling out of the shares that I purchased today. However, guys, Tesla couldn't hold $650 as support into the closing bell. I am going to pull up here the 3-year chart and take a look at 650 bucks, guys. 650 bucks happens to be a previous support back from August of last year. So this is an important spot. And watch out for Tesla tomorrow because if the bulls fail on taking on 650 bucks, this might be a short signal, guys. We might be grabbing puts. I might grab puts in order to hedge against the 35 shares that I purchased today. And the next important support for Tesla, guys, is going to be at around 620 bucks. 620 bucks is a previous support back from late May. So if the bulls tomorrow happen to fail at 650 bucks, 650, 60, 55 bucks ish, then we might be talking about a potential short position of Tesla down to 622 bucks. And if Tesla, and taking into account that the stock of this company is very oversold as of now, we can see the RSI sitting at 29 points. And if I think that if Tesla happens to pay a quick visit down to 622 bucks ish or 620 bucks, the RSI of the stock of this company is going to be way lower. And that is going to increase the likelihood for the bulls of Tesla to find support at a previous area of support and then bounce back up. So my plan when it comes to Tesla, I want to sell out of my shares at around $690. If we fail at 650 bucks, I might grab some puts. And I want to buy call options near $620. And with Tesla my Tesla, I am going to wrap up this video. Thank you very much for your attention and thank you very much for hanging out with me. Once again, remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out, guys.